Our chief equity strategist and economist, John Blank, is here now to help outline the Fed's taper timeline. John, the Fed usually leads the way in this activity, but this time Fed Chief Jerome Powell is behind his peers from other countries. Why do you think that is?
Personally, I've said this for some time. I think Jerome Powell is trying to get renominated as the Fed chair, and he has not been willing to take very aggressive decisions in front of that decision, which is imminent. And I do think the Fed taper in November was very late. It should have happened probably in the summer. The other thing is the ECB, and Christine Lagarde is even more tardy than he is. So that is also giving him cover because the ECB is continuing to hold off on even its timelines past the Fed. So there's just a host of peer issues and career issues that are driving a lot of Powell's thinking.
Yeah, you've written, in fact, that the ECB may be even further behind the curve than Powell is with the Fed. So which countries are leading the way?
There are three, Terry: Russia, Brazil, and Mexico. Brazil is at over 7.75 policy rate. Russia's at 7 something, and Mexico's like 4.75 on their policy rates. Because people need to understand the inflation surge in the U.S. economy is not specific to the U.S. economy. It is a global phenomenon. Every part of the world, literally every part of the world, experiences. Some of the commodity players are seeing more of this than the others. That's why Mexico, Russia, and Brazil are seeing major hiking of their rates in front of even stronger inflation rates than we see here.
Yeah, and I think you alluded to the answer to this question a moment ago, but I'll ask it anyway. Why are the major central bank players so hamstrung?
You know, it really is kind of a puzzle. My own personal feeling is we've got in the habit of appointing people who are not economists and are not very wedded to the diligence of the statutory mandates. The other reason is simply because the statutory mandates are not being violated on the unemployment rate. So you can kind of get a pass on the unemployment rate because we still do have people to put back to work. And that's how they've been playing it. But I generally think there's been way too much passivity in this environment.
You also say the U.S. lag spells out a major worry for stock investors for 2022. What is that worry?
Well, the worry is that I'm right, and the Fed starts to crank rates up, and the ECB starts to crank rates up, and the BOE. And the next few weeks, we're going to see the Bank of England probably lead the way here. So I would pay attention to rate hikes out of policymakers that can be much stronger than people think, and that will tank stocks.
I've read that traders have reportedly moved up their expectations for the first Fed rate hike to July of next year from their original September call. Do you agree with that?
I do. Simply put, I do.
Okay. Meantime, are you seeing a flattening in the yield curve taking shape that investors need to be concerned about now?
Well, we're not really. I see nothing. I mean, the 10-year is at 1.6%. It'll go down to 1.45 or up to 1.7, but 25 basis points of movement is nothing. It's basically fluctuating around a very tight range because the Fed's in there still buying bonds, buying less bonds, but still buying bonds.
All right, looking at the bigger picture, what story do you think the GDP data and other economic data is going to tell going forward?
You know, really, Terry, the only thing that matters because of the Fed money is the unemployment rate. So GDP is really not strong or weak. It's going to be ignored by the market unless it's really negative. And what's going to matter to the market is the household unemployment rate. If it gets towards 3.5, we got worries on the rate side.
And inflation, does that play any role in your outlook here?
Strangely enough, no, because they have enough stories about COVID and transitory in play, and they're going to continue making the assumptions, as Janet Yellen spoke to, of a mid-year 2022 dissipation in the overall core inflation rate. So they can play that story out for the next 6-7 months.
And you're currently looking beyond the fashionable stocks. So on your radar now is a company called Xilinx, Stellantis, I believe. Hope I pronounced it right. Stellantis, separate stock. So there's Xilinx, Stellantis, and Nutrien.
Yeah, let's talk Xilinx first. Xilinx is a provider of programmable integrated circuits, integrated chips, programmable chips. This stock has just gone parabolic. It was, $120 this year. Now it's at $216. That certainly buys you a value score of F. And but it gets a Zacks rank of number one because it continues to deliver earnings upside because of the semiconductor supply issues. But I'm actually a seller of Xilinx, even on that one rating. Stellantis is a big automaker. It's a European one. It used to be Fiat Chrysler, and it's based actually in the Netherlands at this point. $20 a share on this thing. People are looking beyond these old players to the electric vehicles. So you got a value score of A and a growth score of A. And basically nobody wants this stock. And then you get to Nutrien. Nutrien is another parabolic stock. Back in March, it was $35 a share. It's almost 70 now. And again, you get a Zacks number one rank with a value score of D. Good trading stock. It's probably going to rise a little more. But I would be very reluctant to not keep a tight leash on a stock like Nutrien.
Taper Talk and more with our chief equity strategist and economist, John Blank. And with John, I'm Terry Ruffalo. Find out how you can get the book Finding Number One Stocks. In this 300-page hardcover, Zacks Executive Vice President Kevin Matris reveals almost every stock-picking secret he's learned from the system that, since 1988, has more than doubled the average yearly gain of the S&P 500. Find out more at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.